So thank you for joining us today. It'll just be a brief 25-minute presentation on some of Doug's experiences on how to, from running his own firm and working with his clients, on how to increase your income per accountant or technician within your firm. And firstly, we'll just get into a little bit here about who is who. And my name is Paul Roy. I've been a business owner much of my life. I've been a coach and consultant now for 12 years and work with both business owners as well as accountants and accounting firms. And Doug and I got together 4 years ago as the co-founders of CPA Business Coach for the purposes of helping accountants get more engaged in their clients' businesses. So Doug, go ahead. Tell us a little about yourself.
All right. Thank you, everybody, for attending today. And thank you, Paul, for helping me to coordinate this today. I have been a CPA for over 40 years now. Actually, my career spans 50 years as of June. So I guess I'm hopefully getting better, not older. But yeah, I started my practice in 1977 as a sole proprietor, and we're now a regional firm with 4 offices. And I retired as the managing partner in the beginning of 2020, and now I'm working with Paul and Scott Lippitt on CPA Business Coach. I don't believe in retiring. I think at this point I want to give back what I learned over my 50 years to other CPAs and their firms to help them manage it better and be more profitable, work smarter, not harder, and have more time for what's most important for them.
Wonderful. And just before we click the next slide, Doug, and you start to share some of these best practices for profitability in your firm, if you have any questions, feel free to just drop them in the chat box, the Q&A box, which I'll be monitoring as Doug is presenting, and we'll see that your questions get answered. So Doug, here you go.
Yeah, I want to say in the beginning that a lot of what we're going to talk about today, I'm sure everybody knows. But as you get into your practice and get busy on a day-to-day basis, these are things that we forget about. Doing these simple timekeeping 101s, they go to the back of the table and they're forgotten as time goes on. And as you get new team members on board, we probably don't explain it well enough for them to realize what we're supposed to do in our time management and what we forget to do on a day-to-day basis. So that's what I want to start with, is that, just getting from each team member a half an hour extra chargeable per day will add up. And we're going to show you how it adds up. And here's some tips on how to make sure that everybody is, number one, putting down their time, and number two, accounting for it properly. The first thing I want to point out is that everybody knows that when we get our CPE, continuing professional education, we get 50 minutes equals an hour credits for every 50 minutes that we're in class. Your society or the American Society gives you a full hour of credit for that 50 minutes. So remember, our accountants and our team members are not machines. You don't turn them on at 8 o'clock and turn them off at 5 o'clock. As humans, rather than machines, we have needs that have to be taken care of during that 8 or 10 hour period. We have to have coffee, takes time to go get a cup of coffee. We have interruptions. Maybe one of the kids are calling, or we have to call and make it a doctor's appointment. Those are all human needs that have to be taken care of. And we all know after we drink the coffee what happens. So that's a human need too. So nobody's going to get exactly 60 minutes of client work done in an hour. So remember the 50-minute hour. And that's the way I think it is fair to charge the client, and it's fair for us to bill based on the 50-minute hour. Other tips to make sure that we're getting that extra half an hour chargeable today is input your time as you go along. Because if you get to the end of the day, I don't know about you, but my memory's not that good to get every 10th of the hour billed to the proper client by the end of the day. The day goes by for me as a blur, and I can't remember every phone call or every email, et cetera, by the end of the day that I took time to answer. And sometimes I can't even remember which clients I worked on by the end of the day because it's all a blur. And so, put your time in as you go through the day, not at the end of the day, and definitely not the next day. Who can remember all 8 hours of by the next day? And God forbid if you try to put it in 3 days or a week later. And require staff members to explain if they do put non-chargeable time in. Explain what it was for. And explain to the client that, it's not non-chargeable just because you don't think it should be chargeable. And we'll talk about that in the next slide. So we need the supervisor or some administrator to review the next day and question non-chargeable time. Should it have been charged to somebody? All right, Paul, any questions on this or anything you'd like to expand on?
No, it makes perfect sense that we're human, as you say, and everybody has a different percent of effectiveness or efficiency, and this is a fair way of rounding that out. So thank you for expressing that, Doug.
All right, so let's take it a next step further. If you have a half an hour extra chargeable today, each day, and your average billing rate is $125 an hour for your firm, some of you may be under that and some of you may be over that. But let's say it's an average of $125 an hour. That's an extra $62.50 per day per team member. Doesn't sound like much, but we're going to see what happens to that as we go on. So here's some more tips on how to get that extra half an hour chargeable per day. Make sure you explain to your team members that they do not decide whether to charge or not to charge. If you're not controlling your non-chargeable time, it's very easy for team members to put their time that they're working in on a client to non-chargeable, especially if you're holding them to a budget. So you have to make sure that, again, you're monitoring the non-chargeable time and they're not just slipping the time that they're actually working on a client into non-chargeable.
So this then, Doug, would be the responsibility for the final decision on this of the manager or partner that the accountant would be reporting to.
Right, that's my next point. Those in charge of billing decide to write up or write down. The team member shouldn't be deciding that as you're going along. Mistakes and redoing work is part of the work. Again, we're not machines, we're not computers, and I dare anybody to say that they're perfect, never made a mistake, and never had to redo their work. That's what to-do notes are all about. And certainly, when I'm working on something, I always work. I'm a little old-fashioned, Paul. I still use a pencil with an eraser. I know most people do work on computers now. I do too, but I still have a pencil with an eraser on it. So, again, my point is accountants are not perfect. We are human. And also management needs to know the total time on the project. If somebody's putting their time into non-chargeable just to make it look like they met budget, management doesn't know that the budget is incorrect and should be raised for next year. And if the budget should be increased, then the fee should be increased. And so we need to know, the people that are doing the billing, what their true time was on a project.
Okay. Excellent point. Next
Okay.
slide, Doug.
All right, let's go to the next slide and take this 6250 a little bit further. So everybody thinks a half an hour a day is not very important as far as chargeable time, but then you take it, the 6250 times 5 days a week, times 48 weeks, assuming that, vacation time, PTO time, and CPE time, that adds up to $15,000 per team member in extra chargeable time, just one little half an hour per day. And I'm only using a half an hour as an example here. I bet you anything that without proper supervision of time management, you could be losing a lot more than a half an hour per day per team member. So here's some more tips on how to do that. Is make sure that the team members are charging for 1/10 of an hour for telephone calls, consultations, interruptions, people walking into the office. And so, all that work, and that's why you have to put the time in as you're going along, because you're going to forget those interruptions by the end of the day, I can guarantee you. Consider the time to stop working on a client and starting again with those interruptions. So, if somebody gives you a phone call and you answer that in 2 minutes, still bill 1/10 of an hour. 1/10 of an hour is 6 minutes. But, bill that 1/10 of an hour because, it's the time that was taken away from the other client that you just don't start work again. You lose your momentum through that interruption. In an 8-hour day, junior team members should be 100% chargeable. I've seen team members put down 1/10 to a half an hour a day for administrative things. Well, the job isn't done until the paperwork is done. So the administrative things go into the job. They should be 100% chargeable and not chargeable if there's a staff meeting or if it's CPE or PTO and holidays. But certainly doing the 50-minute hour, it should be 100% chargeable. So if you have team members that push back on that, ask them, if you're working for somebody, let's say you're working for a client, you're on their payroll, you worked from 8 to 5, you had an hour off for lunch, which is not paid, how much would they charge the client for that day? The bottom sentence, by the way, the word "not" is left out of that by mistake. But the answer is 8 hours. So why would they not charge the client for 8 hours, or all the clients that you worked on for that day 8 hours? If you're on their payroll, you wouldn't deduct for the 10 minutes that you went for the coffee or 10 minutes to the bathroom or et cetera like that, you'd expect to be paid for 8 hours, right? So keep that in mind is if you get pushback on the 50-minute hour.
My apologies on that sentence. It may have been the version of that, Doug, that the last draft adverse to the final draft. So
no, I drafted that and I made the mistake.
All right, you're letting me off the hook.
Okay, no, the buck stops here. All right, so now here's what we promised you, because everybody knows that everything billable or chargeable does not always get billable. Hopefully your firm is in the 80 to 90% billable of the charged hours, and if not, we can help you there too. But if you take the 15,000 and your average firm billable is 83%, there's our 12,500 that we promised you per team member. And if you have 6 team members, that's $75,000 in pure profit to the bottom line for your firm. And if you got 10 team members, that's $100,000. And remember, we're doing it on an average of $125 an hour. So we're talking everybody in your firm, including your administrative people. They can get an extra half an hour in per day too. And the partners. I'm not letting the partners off the hook, Paul. Partners can get an extra half an hour billable per day, and that's going to be charged at a lot more than $125 an hour. And if you partners aren't making that, we need to talk. So it's $75,000 if you have a 6-member team. Or if you don't get that half an hour chargeable in per day, that's a missed opportunity to bill because it was never entered as chargeable. So the billing people don't even know about it and they're not going to bill it. So it's your choice. Either implement these simple rules that we all know, but we forgot about as time went on, or miss it and the money doesn't come in. So educate your team members and monitor their time and supervise it daily. Once the day is over, it's gone. Nobody remembers unless you're a super memory person.
Well, it's one of the things that I hear when I'm working with my accounting firms that I work with is the write-downs, because they don't know or have an accurate piece, or they feel that the client has been overcharged because it took longer. And at the end of the day, whether it's the accountant or the partner who's reviewed the file, or if it's the administration team that's putting out the bill, that's the amount of time the team has had on the file, correct?
Yeah, hopefully if they put it into chargeable. But then we're talking a whole different thing. If you're writing down a lot of your bills, then we need to talk, because there's a lot of tips that we can give you that will negate those write-downs and become write-ups. So the first step, Paul, is to get the chargeable time on the books, so that management knows how much time it really takes to get this job done.
And really, if I can jump into here, Doug, because what it boils down to is if you're afraid to bill the client for the pushback, then you're starting to question the value that you're providing the client.
Absolutely.
So, that's a double-edged sword. In other words, I can't bill him that. He'll get upset or she'll get upset. And the point being is then, what is the value of the service that you're providing? So, you need to be able to understand the value and to be able to bill with confidence, correct?
Absolutely. And basically, that's why this is so important, because you need to know the total time that it really takes to finish a job.
Yeah.
And you really need to know all the time, including phone calls and interruptions and et cetera, that the team members are providing. Because the value is you're there when the client needs you. And if you're not billing for phone calls or you're not billing for interruptions, then you're giving away the service. The only thing we have to sell is time and the value of us. If the client hired somebody like us to be on their payroll, they're looking at an expense that they can't afford. But by us being here and available for them, they have a part-time CFO anytime they need it. And they're saving in their budget maybe $80,000 to $150,000 a year by having us here. And that's the value.
And if I can chime in on that, is that once you have that understanding and confidence um, in your own billing, it's also something that you can see and align this with your own clients who may be struggling in their billing or their margins, and it may be a way to open the door to their questioning and their profitability. So it starts with yourself. And
Yeah.
I do have a raised hand here. Where did it go? Goodness, there we go. Never thought. We've got a comment here from Surav, wonderfully explained. Never thought this makes so much sense of a difference. Thank you so much for the insights. Great session. You're welcome, Surav. Also had from, I saw there was somebody that put their hand up and I cannot find it on the, there we go. What, the question has come in now from Scott, and what makes time non-billable? And what criteria should be used?
Well, first of all, let's go back to the basics. It's a three-legged stool. You have chargeability, you have billable, and you have collectible. So that three-legged stool has to stand on three legs. And so the person that's billing has to understand whether the client's going to pay for it or not. And that's a whole different set of criteria. Is you need to set that up in advance. If the engagement is to do a financial statement review and the client provides you with information that's incomplete, then you need to train your team to let the person doing the billing and the client know that the original engagement cannot be completed as quoted because of the fact that they did not provide the information completed. So you need to give them the choice to go back and have the client complete the work and give it to you, or send out an amendment to the engagement letter that will do, for example, the bank reconciliations that you didn't do, but there's going to be an extra cost involved. So that's the time to let the client know that there's going to be an increase in the quoted fee, not after the job's done and you're going to send out the bill and surprise the client because it's 20% higher because the team member decided on their own they're going to do the bank reconciliations. So there's a good example of how to prevent a write-down. And it's communication, it's letting the client know in advance that it's going to cost more and giving their approval to do it. Does that make sense?
Makes perfect sense. Some of you can call it, I don't know if that could be classified as creep or scope creep, but it's, it's work that wasn't anticipated for or estimated for, because the client didn't bring in the prepared files that were required to do the job.
Exactly. And you spell that out in the engagement letter that if there's something that's unexpected, we will let you know in advance and we'll negotiate the fee and get your approval to do the extra work. So that's all important to have it, and the engagement letters should be spelling out exactly what you're going to do and when the fee will be increased because extra work, unanticipated extra work is going to be involved.
Yeah, and it's really about communicating with your client, isn't it? And
Yeah.
understanding that, you say it in the engagement letter, but it's not just in the engagement letter, which is the formal thing. It's having that open conversation with your client at the
Right.
outset.
Right.
Yeah.
And, what I like to do, or what I did do during my career, is I like to give the client a good estimate. And in order to do that, I have to have good information from the year before as to how much exact time it took our team to do the work, because they inputted all the hours as chargeable and not non-chargeable. And that's also, no surprise to the client. If there's extra work to be involved, the team member is going to let me know before they do the work, not after they do the work. And again, no surprises to the client. Either they can do the extra work or pay us to do it. And most of the time they'll say, okay, do it, because we don't have the time. And at least they had the choice. And also, as you go through and decide to work with a client next year, if you're writing down a client, well, the first year, shame on them. But the second year, shame on you. You either increase the price, fire the client, or look at your team member and see why they were over budget. Maybe they need more training. Maybe they need more supervision. A lot of times the write-offs are because of lack of training or lack of supervision of that team member.
Great points. So we're just coming down to the bottom of the hour here, Doug.
Mm-hmm.
I'll jump in here. Anything else you'd want to add before we close off, and just a way for our audience to reach out to us if they'd like to work or spend some time with Doug or myself or have a conversation? Our numbers are there, or you can reach us through our website question form. We'd be happy to have a conversation with you.
Well, there's more that I can add, but it's like asking me to tell you everything I know in 30 minutes.
Well, actually, we're at half past the hour, so it'll be everything you know in about 30 seconds.
Okay. All right. No, if they wanted more information, here's our website and telephone numbers, and feel free to contact us. We'll be glad to help you out.
Well, that's wonderful, Doug. Thank you so much for sharing these nuggets of profitability within accounting firms.
Well, I hope everybody's going to be more profitable after this 30 minutes. So thank you, Paul, and thank you, everybody that joined us today.
All right. Have a great day. Thank you from Doug and Paul.